The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com. Well, it's been a heck of a week for silver and many other things for that matter, but let's go ahead and get into the silver market. So one day does not make a market, as I like to say, but today the market's still trading, but we've seen a 6% decline in silver today, and the volume has been rather substantial, as you can see here. So I'm going to back up, and I like these new charts by Kitco, by the way, but going back for the week, we can see that we got under the $30 level in the spot market, stayed there for a little bit, and then it bounced way up at about 31.50, and now we're back under 30. So we're probably establishing a trading range here. It's really too early to tell, but it looks as if it could be in the 29 to 31 range. If we just go out to a month, we can see that we were well under 30 a month ago, in the $27 range, and we made it up to 28, and then of course we zoomed up to 30 and got all the way up to 32 and change, and then we're now in this sort of pattern that we're looking at here. What I call a high-level consolidation, which is bullish, but also trading range. I don't expect to see 33 in a week. Could. I just finished a panel discussion yesterday with Metals Investors Forum, and thank you, MIF, for inviting me. Myself, Peter Croft, Chen Lin, and 4 mining companies. Tavi Coast was the kind of the moderator on the panel. I believe it's for free for everyone. And Chen is thinking that we could see $50 this month in June, or perhaps July. I have a different take. It's too early to know one way or the other, but it's certainly been a very volatile market with lots of volume. And what's interesting is the retail participants have probably stepped away. Almost all this is going on in the derivatives markets, and there's still a pretty big arbitrage between China and New York, somewhere around the $3-4 level still. So it's going to be interesting to see how this shakes out going forward, but I think the $30 level is more or less support. I mean, obviously we're at 29.33. You can see it on the screen. So you might say 29. Technical analysis is more of an art form than an exact science. Really, a lot of us thought that the breakout specifically was about 28.50. You can take that for a grain of salt, but the idea again is that we're probably establishing a trading range. Just a few news items here. This is from obviously investing.com, and as you can see, world central banks continue to accumulate gold. So even though retail is sort of selling out or breaking even, taking profits, whatever they're doing, basically standing to the sidelines for the most part, and our sellbacks, central banks continue to accumulate. On silver, you can see this is the deep dive. India silver imports in the first 4 months of 2024 already exceed 2023 figures. As I've said before in a few of these weekly perspectives, the solar farm that's proposed to be put into India is 5 Paris, France's in land size. So it's monumental. It'll be the largest solar farm in the world, to my knowledge. And so the amount of silver that's being used on the industrial side, particularly photovoltaics, is pretty astronomical. And it's pointed out in that panel discussion yesterday that the figures from let's say some of the most well-recognized silver studies have underreported the amount of silver used for photovoltaics. In a couple cases, they've corrected their errors as far as the amount that they guessed would be used in any given year. But going forward, it looks like the projections are probably not, again, sufficient to cover the amount that probably will be used. So the demand side on silver on the industrial side remains extremely strong. And the demand side on silver for investment purposes is actually waning as far as retail is concerned, and yet you see this arbitrage between China and New York that obviously means that silver will make its way into the Chinese market because of the spread being so great. Whether or not it gets there legally or illegally, I'm not going to address, but when there's that kind of an arbitrage opportunity, metal will. Well, I guess I should review all the news before I speak, but this kind of contradicts what I said a moment ago. But China commissions a 5 gigawatt solar project, world's largest. Is it larger than the one in India I just mentioned? I guess it is. You believe photovoltaic tech. Anyway, you get the idea. This solar thing is here to stay, and it's certainly growing by leaps and bounds, which means more and more silver will be used as a result. So the other thing was pointed out that worth mentioning is that a lot of these solar farms, you can actually install them fairly quickly. And as far as on a cost basis, they're really not that costly versus putting in a coal plant or a nuclear plant or even natural gas. So you're seeing a lot of these used not only because of the power required, but because the availability is in a very, very timely manner. In fact, some of these mining projects that I'm most familiar with, in some cases, rather than tap into the current grid, these places are so remote. In some cases, they're just building their own solar farms in order to put the mine into operation. And I'll go ahead and close with this one. China's overproduction of solar panels drives silver demand to 12-year high. Well, I'm not sure they're overproduced, but the market seems to be absorbing them, that's for sure. And I'll leave it there. It's very interesting going forward. I'd like to see what happens here in the summer months. Usually we have the summer doldrums with the precious metals. The old adage is sell in May and come back after Labor Day may hold this year. It may not. It's too early to know. But regardless, we've reached a new level in the silver market above 30 or 30-ish. And we'll see if that maintains or we just get in a large trading range as I expect to see. But by months ahead, I'm certain that we're going to see more and more price pressure to the upside on the precious metals. It's David Morgan with the Weekly Perspective. I'll be back with you next week. Hello, it's David Morgan again. The financial landscape has drastically shifted since the pandemic. The old rules, they no longer apply. Inflation is spiraling and traditional investment paths aren't making you wealthy. You're watching your wealth diminish. But here's the good news. You don't have to be a passive spectator to your own financial decline. We're thrilled to announce an exclusive limited time offer at the Morgan Report. For those who join us now as premium or mastermind members, you'll receive a complimentary 30-minute consultation with me. With decades of experience, I can help you navigate even the toughest economic climates. This is your chance to get personalized advice tailored just for you. But act fast, this offer won't last long. Whether you're looking to refine your current financial strategy or start fresh, this consultation could be the turning point. Imagine having direct access to insights that could safeguard and grow your investments during these volatile times. Signing up is easy. Just head over to themorganreport.com. As a member, not only will you get this exclusive consultation, but you'll also gain immediate access to the Morgan Report Opportunities, a resource where we share our top investment recommendations and strategies. Don't just take our word for it. New members can try us out for 30 days. If you find the consultation and advisory newsletter isn't for you, we'll refund your money. Remember, this offer is only available for a limited time. Don't miss your chance to get ahead in this uncertain economic climate. Join as a premium or mastermind member today and start your journey toward a more secure financial future. Thanks for watching. If you have any questions about the offer or your investment strategy, leave us a message. Until next time, stay smart, stay safe, and keep building your wealth.